Hi guys, welcome to Pivotal Traders. Today's expiry was somewhat in line to what we discussed yesterday. Yesterday's video discussed that how the upper range bound of the Bank Nifty would be 33,300 and the lower range was far off because I was anticipating that the run would be bearish, and that's what happened. So let's just quickly delve into the published idea and look what was our performance. So this was the published ID which was made yesterday, and you can see here when we click here and just try to gauge. So we anticipated that the event of a gap up opening, the black line is denoting the same, and the market would follow a downward trajectory, where we sensed that the market yesterday closed below 33,000 and a bearish character would happen there, and any upside opening in the Bank Nifty would be bearish in its nature. You can see here that the black line was respected, and that was the case throughout the day, and even not once the black line was respected, even though the gap was huge and there was a bullish candle formation, the black line was respected across time frame. If you look at the 2 minutes time frame, 5 minutes time frame, 15 minutes time frame, it was respected across. So that was the beauty of the black line which we deduced. And for the second time, when the price came, it tested the red line, which is the simple price action red line, and the Bank Nifty now still moving, and it seems to be closing well within the range we defined. And you can get a sense of the idea that we were very tight in our upper bound range, and you can see that we were only far off around 300 points, and still I was confident enough that the Bank Nifty would be bearish and it will respect the black line across the time frame. So that was the beauty of today's expiry, and the expiry was very much volatile. You can see that if we are to look at the price action, you can see that a wedge formation did take place here. Let me just A wedge formation did take place around this level, and that was broken off. That was broken, and then the price followed a downward trajectory, and it filled the gap and spent some time around the gap filling area, and finally a short covering did take place in the market. So this short covering was also respecting the level which was marked by the price action, the red line, and then continued its trend. So the trend in the morning was bearish in nature. Let me just clean it up. So the trend in the morning was bearish in nature. It did came for the short covering, as it happens on the expiry day. It did came, but the magnitude was small, it was not huge, and it trapped many of the bulls and bears out, because many of the bears might have got their stop losses hit, and then it continued the downward trajectory. So that's how the beauty of the expiry was. If I am to look at my position today, let me just show it to you. So this was my position for today. So many adjustments were made, and this is still going live. So you can see that many of the strikes traded by me, and even though there were many upside and downside in the positions, it went to 8,000, then 5,000, 13,000, then came back to 7,000, but we were able to close it very decently. So this was it, guys. We did very well today. I hope you also did well and kind of utilized our analysis which was published yesterday. Thanks for watching. Do subscribe, comment and share among your peers. Thank you.